301, week 2. So how many of you got a benefit out of last week learning our product inside now? Okay, very good. Uh-oh, no battery. So, let's go ahead and get started. It is our moral obligation to close, you all. It is our moral obligation to close and to help people move forward. End of story. Right? The truth is, some of you think, I don't want to be pushy with people. Well, let me tell you 2 things. Number 1, you need to remove the word pushy from your vocabulary. Okay? Because pushy is when you're trying to get somebody to do something that's not in their best interest, but is in your best interest. Do you really need the $3,000 vacuum cleaner? Is that really a need? Do you really need the $5,000 water purifier? If you live in Flint, maybe. But anywhere else, okay, is it really a need? Okay? Do you really need that new furniture set on credit at 29% interest? Okay? That's being pushy. When you're, oh, I want to think, well, let's buy today and this. That's being pushy. It is impossible for you to simultaneously be pushy and help people make decisions that are in their best interest. Those 2 things can't coexist. Do you understand that? If it's in their best interest, okay, you are not being pushy. What are you being? Okay. There's a bunch of different words for it, okay? But pushy ain't one of them, okay? Say what? Well, you're being moral, right? I would say you're being an advisor to these people, is what you're being. You're being an advisor that has their best interest at heart, okay? How many of you have kids? How many of you sometimes ask your kids to do things they don't want to do, but they need to do, and it's in their best interest? Do you let them close you on it? No, I'm going to stay up till 3 a.m. I'm going to down this can of soda, and I'm going to eat a bunch of Tylenol, and because it tastes good, right? Okay, is that? You wouldn't do that with your kids, but that's exactly how you act with your clients.
That's good.
They're trying to take poison, and you're like, sure, go ahead, no big deal. I wouldn't want you to think I'm being pushy, right? Okay. So it is our moral obligation to close and to help people move forward. When you're sitting across a kitchen table from somebody that can buy and it's in their best interest, you need to close. Because if you don't close, you haven't helped them and you haven't helped yourself. Nobody was helped. When you get them to move forward, they're helped, you're helped, everybody wins. You're either creating a win-win or you're creating a lose-lose, and it's up to who? It really is up to you. A pro is going to close. A pro is going to close. Virtually always. Not always. There's always some people that are completely illogical, have no sense of reason, and become just idiotic, for lack of a better word, at their kitchen table. But those are few and far between if you get great at what I'm going to teach you, right? Okay? So listen, if information were enough, there would not be 90 million uninsured families. Some of you want the information to sell itself. It's not going to. It's just not. Can you get information about term insurance online? How quickly could you get it? Very quickly. But yet 90 million people don't have any of it. So therefore, if information was enough, there would not be 90 million people without it. Yes or yes? Okay. The way that our business works is financial products must be sold. They are not bought. Okay? Some of you don't like that, but that's just how it is. That's just how it is. This is a business that for the next 100 years will not have any online impact. Think about what online has done to virtually every industry in the world, right? What's Amazon doing to the big boxes? Right? Gone. What's Uber doing to taxi companies? Gone. Right? Okay? Can't happen here. Why? People are so uneducated, okay, that they just don't know the first step of the first step. You understand? Right? Okay? They need somebody like you and I that can educate them, that can sit at that kitchen table, that care enough to be a little uncomfortable to help them make the right choice. So this I Googled today on GoFundMe. In Clarkston or near Clarkston, Michigan, right now there are 1,413 active GoFundMe for funerals. They range in value between $0 raised and $12,000 raised. That was the high, that was the low. Okay. Who's going to pay the mortgage? Who's going to put food on the table? Who's going to pay for their health insurance? How are these things going to happen? It is our obligation to people sitting at their kitchen table to get them to move forward. End of story, or this is coming, you don't know when, hopefully not soon, but that's the fate. There's no other option. Nobody's coming after you to help these people, okay? So you got to look at that and look and say, when you're sitting there, I have an obligation to help these people move forward. And it's a lot bigger than what they think of me, because it's not going to matter what they think of me when I'm bringing them a check. Doesn't matter what they think of me when I'm bringing them a check. I have a job to do. Listen, what did Art Williams always say? Right is always right. Doesn't matter how other people feel about it. Right is always right. And if you're doing the right thing, and what do I teach you guys? If it's not the right thing, don't ever ask. And if it is the right thing, get ready to go to war. It's black and white. You never ask people to do the things that are not the right thing, never, ever, ever, so that you can have a very clear and stark contrast when it is the right thing, that you can ask and ask and ask again. Okay, just a helpful tidbit. They say something like 90% of sales are made after the 5th no. Say no 5 times and then they buy. Okay, so most of you simply will not stay in the close because you're not tough enough. Your skin isn't thick enough. You feel uncomfortable, and you buy, right? You buy the excuse. You buy the garbage. You buy them not caring about their family, right? Because you're not tough enough there, but you need to stay in the close. So today what I'm going to do is I'm going to take you through the process. So we talked about why this product is the best product in American business. It's available for term insurance. Okay, now we're going to talk about the scenarios you're going to run across at the kitchen table, how to present, how to get closing questions asked, and how to take the app, how to close them on moving forward. If we have time, which I doubt, we'll start into objections. If we do not have time, we'll do objections next week. Okay, and by the end of next week, you are going to be great at being able to sit at a kitchen table and help people make the right choices and help them make it smoothly and professionally, where they feel great about what they're doing, not like, I really didn't want to do that, right? There's a way that you can help them do both, okay? So here's the process, 5 steps. 5 steps. I'm a big process thinker, okay? Step 1 is identify. What does that mean? You got to identify which circumstance they're in. I'm going to get to that in a second. So you got to identify where they are in the process of insurance, okay? Let me just jump to that real quick. So the 5 scenarios: no life insurance and they're single, no life insurance and they're married, group life insurance, permanent insurance, or term insurance. There are only 5 scenarios that you're going to possibly come across at a kitchen table, okay? So you got to identify which one it is. Then you're going to present to them the appropriate presentation. Each one of those 5 scenarios has a little bullet point presentation you could draw on a napkin, okay, and you just line them up. If it's this scenario gets this presentation. You understand? Okay, closing questions. This is applicable on 1 through 3. Scenario 4 and 5, you don't need to ask them because they already have some sort of insurance, okay? The A diagram, which is the close, and then obviously any objections that come up handling those. If you follow this, virtually everybody will buy. Virtually everybody. So when people don't buy, it's because you have shortcutted this process in some shape or form. Okay, you understand? It's very, very basic. There's only so many things that can go wrong, and there's answers for them, because it can't be wrong if it's the right thing. The only way something's going wrong is you're going off course, or you're not skilled enough to communicate to them to help them understand why it is right. Right? Do you understand? If it's right, and they simply don't understand it. And they don't understand it because you're going off of process somewhere. Okay? Everybody following that? Okay? So identify the 5 scenarios. No life insurance, and they're single. Okay? So here's what I'm going to do. I meet Steve Elgerman. He's single. I'm talking with him, probably on a recruiting appointment, but I'm going to ask him to say, Steve, let me ask you a question. Do you have any life insurance? And he's going to say, no, I don't have any life insurance. And I say, have you ever thought about having life insurance? And he might say yes, he might say no. It doesn't really matter. And here's what I say. I say, Steve, would you mind if I give you a couple-minute education on why single people should have life insurance? Okay? Do you mind if I give you a couple-minute education on why single people should have life insurance? I believe single people should have life insurance. If you're over 18, you should have some sort of life insurance. Why? The fact is, most of your parents probably wouldn't look forward to spending 40G on sticking your butt in the ground, because they're not doing so great either. Plus paying off your car or whatever other debt you've managed to rack up since you left your house. Okay? Somebody's got to deal with it. You realize that, right? Somebody has to deal with this. So we might as well leave them the same or better off versus in the hole, right? How many of you agree with that? Okay? So here's why. So Steve says, sure, yeah, I'll you can give me an education. So I say, Steve, listen, there's 3 reasons why I believe single people should have life insurance. The first is the cost. So I write the cost down. Okay, I say cost. And I say, Steve, 2 things affect the pricing of life insurance. What do you think those 2 things are? So you said age. Okay, great, you're right. And health, right? Sometimes you tell how clueless people are when they're like, they're like guessing these totally random factors that have nothing to do. Like, how did you come up with that, right? Okay, but I write it down. So I'm writing it out, age and health. So Steve, let me ask you a question. Will you ever be any younger again than you are right now?
Probably not.
You're sure?
Yep.
Yeah. Okay. So we know literally every day that you age, this is going to get more expensive, right? For sure. Now, Steve, did God make our bodies to get healthier and healthier as we age and live forever?
Nope.
No, He didn't, right? Unfortunately, we get worse and worse off generally as we age, okay? So if we know this product is guaranteed to cost more because we're older and less healthy, at some point we're gonna have to get it. Steve, let me ask you a question. Would it make sense to pay a whole lot more later on or to lock it in at the cheapest possible price now?
Let's go as cheap as possible now.
Okay, very good. Okay, the second is something called a living benefit. So Steve, most people think the worst thing that could happen to them is that if they were to die prematurely. But for somebody who's single, way, way worse than that would be to not die, but to become very, very ill, right? Okay, because you're, God forbid you have some disease or something, you're going from chemo to radiation, you're not going from there to work, right? So your medical bills go up because health insurance doesn't pay for everything. Your income goes down, somebody's got to drive you around so now they can't work, okay? So 2 people's income's affected on it. Okay, let me ask you a question. If you could have an account with $400,000 in there, just in case that happened, would that help you in that scenario?
That would help me
Sure.
in that scenario.
Do you have an account with $400,000 in it just in case?
Not quite
Okay,
yet.
so that's why you should have this. You see how I just tie them down to it? Would that help you? Yes. Do you have an account with that in it? No. That's why you need to do this. Okay? The third thing, Steve, is most people think like, my life insurance there to take care of the people I love and care about if I were to die prematurely. I don't have a wife, I don't have kids. But Steve, let me ask you a question real quick. Is there anybody in your life that you care about deeply that you feel like probably is just not doing well financially? Do you have anybody like that in your life?
There's a few of them.
Okay.
Yeah.
God forbid something happens to you and 2 weeks later a check shows up that pays off their house, pays off every ounce of debt, allows them to retire, and they got that check in the mail that had Steve Elzerman's name on it. How do you think they would feel about you?
Probably be all right with
It
that.
would be life-changing for them. It would be life-changing. Okay, if you had a ton of money right now, millions and millions of dollars, you'd be helping these people, wouldn't you? Of course you would, right? If something happens to you prematurely, do you want to stop that, that to stop you from being able to help those people? Of course not, right? So this is why you should have this. Okay, and then I'm going to ask them, step 3 was what? Closing questions, right? And step 4 was a diagram, and then objections, right? But I have created a compelling need, because there is a compelling need. I have never seen anybody who got a life insurance death benefit check send the check back. I've yet to see that. Never happened. I can't believe this person gave me $500,000. Let's light it on fire. I didn't want that money, right? Okay. So, no life insurance and married. Okay. So I see Josh, and Josh is married. They say, we don't have any life insurance. I said, you don't have any life insurance? And I just wait for him to respond. You just look at him, you see, you don't have any life insurance?
Nope.
And I just wait. Right? And generally, that's enough to make the sale right there. Okay? I say, well, Ta-Nehisi, listen, when I see people that have no life insurance, there's usually one of 3 reasons that they don't have it. Okay? The first is, I meet people that know they kind of need it, they just really haven't gotten around to getting it. See how I'm shaking my head? Yes. Right? I've slowed down the tone of my voice. Right? Generally, they say, yeah, I know. Sale's done. Right there. They know they need to do it. They just haven't done it. He's there. You're there. Done deal. Right? Okay, the second reason, Ta-Nehisi, is sometimes I see people that are worried about the cost. They're just like, gosh, I don't know what it's going to cost. I don't really want another big, gigantic bill. The third reason, Ta-Nehisi, is this, and I'm sure this isn't you, but every once in a while, believe it or not, I meet somebody that just doesn't care about their family. So obviously that's not you. So which of the first two would you say that, is the main reason you don't have this right now? And I get a response. It's going to be what? Number one or number two, right? Okay. If it's number one, I say, great, I'm going to help you take care of that today. If it's number two, I go right into the closing questions because we'll help establish price and value. Everybody understand this? You got to be able to look at somebody with a straight face, say, Paul, listen, the third reason, and I'm sure this is not you, okay, but every once in a while, I do meet people, believe it or not, who just do not care about their families. So obviously that's not you, right? So which of the first two reasons, Paul, would you say is the main reason you don't have this right now? Yeah, a little both? Okay, great. Well, I'm going to help you take care of this. I'm just 100% assumptive. I would say, I'm going to show you numbers and say, I'm going to help you take care of this. Because it's my moral obligation to help him take care of it. If I walk out of there without a check and without an app, that family is not protected. And I have not done my job. My job is to get them to move forward, not to make friends, not to make, new, neighbor acquaintances, not to have people feel incredibly great about me, although I want that to happen. My job is to get them covered. That's my job. I'm not confused about my job. Some of you are confused about your job. You're a professional visitor. You just go and you visit with people all day, right? Okay? But that's not helping anybody.
Hey, quick question.
Yep.
If somebody does say they were number three, is there any way to get
I've
around
never
that?
had that happen.
I had that happen.
You had somebody say you don't care about their family?
With Josh and
Yeah. Okay.
Yeah.
You just don't care about your family?
No.
Okay.
She can get remarried.
Yep. Okay. Well, that's a little different, but okay. But I'll help you overcome that. If they say I don't care about my family, I close it up. I say, see you later.
Okay,
I've never had that happen. You must be in some kind of stank market. Seriously. I mean, that's crazy. But she'll just get remarried. I say that's wonderful. We don't want to have her get remarried. I don't want her running away with some guy with all this money. Great. Well, we don't want to have her run away with a guy with a bunch of money. Because that's what's going to happen if she doesn't have her own ability to provide for herself. I've had that a couple of times. Right?
Okay. And I was just going to say, probably educational thing on our part, because his thing was he was in real estate and he was building an empire, but
doesn't make any sense. Right. So I appreciate that you think that that's going to happen, but right now it's not happening, so you cancel it when it happens. Yeah. But wishing that you had a bunch of money isn't going to put a bunch of money if something happens to you. Yeah. Right? Sometimes you meet people that are delusional. Oh, I'm going to have all this money. That's great. When you have all the money, cancel your insurance. But until you have the money, you need the insurance. Pretty basic, right? Okay. Group life. So they say, Chris says, oh, I've got it through work. I say, great, but who does your life insurance? Well, I have it through work. Right, but who does your life insurance? I keep asking him over and over, right? Like that, 2 or 3 times, okay? And I say, Chris, listen, what every expert in finance recommends is that whatever you need, you buy on your own. Whatever you get for free, great, keep it. Free is good, get as much free as you can. But anything your family would need, you need to have on your own and control it. So do you mind if I just give you like a 2-minute tutorial on kind of how your group insurance works?
Oh, you're good.
Okay, great. So I'm getting a little yes, right? You see how I changed the tone of my voice? Do you mind if I just kind of show you a little bit about how it works? Non-threatening, non-invasive. I'm going to teach. Because listen, right is always right. Okay? Education is key in helping people to understand the need. Because once they understand it like you understand it, they're going to go forward. It's the sensible thing to do, right? So I say, listen, Chris, there's really 4 reasons why you need to have your own insurance. Okay, the first reason, Chris, I write this down, is the trend. Okay? So let me explain that to you, Chris. Every news channel you turn on, right? You see employees jumping up and down for joy in front of their corporations with the headline, employee benefits getting better and better. Employees less and getting more. Employees ecstatic. Their benefits just keep getting better. Is that what you see on the news?
No.
No. What do you see on the news?
Benefits going
The
away.
opposite, right? Okay. The fact is, the trend in American business is that benefits are going away. They're getting downsized. Their employees are paying for more and getting less. That's the trend. At some point, your company is going to get rid of group insurance because people in China, people in India, people in Mexico, they don't have group insurance. Okay? And when they get rid of it, are they going to ask you your opinion on it? No, of course not, right? This is gone. Chris, do you understand why we wouldn't want to put something as important as our family's entire financial future in the hands of our employer that can change it without our permission? You understand why we wouldn't want to do that, right?
Yeah.
Okay. The second reason is you've got to be actively employed. Okay? So, 40 years ago is totally commonplace, Chris, for people to work at the same company for 30, 40 years, right? Today, the average person changes jobs every 3.5 years. Okay? So, Chris, let me ask you a question. What's the odds that you're never going to retire? You're never going to get a better offer somewhere else. You're never going to go into business for yourself. You're never going to want to move to employers closer to your home. Okay, you're never going to get downsized, go on contract, and then you just drop dead one day. What's the odds of that?
No.
Slim, right? And if that happened and they hadn't canceled your insurance, I have no doubt they'll pay you. Okay? But I just named a lot of reasons they wouldn't pay you, right? So, Chris, when it comes to protecting our family, does it make sense that we would not want to leave so many openings in there why we wouldn't be able to have our family get paid, right? We don't want to have to be working here and jump through this hoop for our family to get money, right? Because when you're dying, you're not like, let me call and make sure I'm still employed, right? Okay, that's not what you're thinking about, right?
Right.
Okay, so we want to have it no matter what, no matter how you die, when you die, you want to make sure your family's covered, right?
Right.
Okay, good. The third is you need to be on active payroll. And I'm writing this down, okay? So what does that mean? Not only do you need to be employed, but you can't be on disability pay. So Chris, what happens, somebody gets in an accident, they get, God forbid they get cancer or something like that. Eventually, they stop going to work, right? They're getting treatment, they're just not coming to work, okay? So what happens is they file a long-term disability claim. And why do they do that, Chris? They keep getting money to pay their mortgage, pay their health insurance, put food on the table, right? Well, when that happens, your insurance policy stops. Okay? So we don't ever want to have your family, okay? Y'all doing okay here?
Yeah, Ian, you went back one.
Huh?
You went back one slide.
Oh,
Yep.
okay. So I don't know how that happened. That's bizarre.
Sorry.
Okay, so we don't ever want to have our family having to look at, do we pay our mortgage and put food on the table, or do we wait it out so we can get his insurance? We want your insurance to be there no matter what, right? When it comes to your family, you need it to be there no matter what. You agree with that, right?
Yep.
Okay, great. The fourth is something called a living benefit. So, Chris, have you ever heard of a guy named Magic Johnson?
Yep.
Okay, Magic Johnson in 1990 was diagnosed with AIDS. Every other human being in the United States or anywhere in the world that had AIDS in 1990 was dead in 1995. Magic Johnson is alive and doing well, no sign of AIDS. The reason Magic Johnson's alive and doing well is for 10 years, he got 10 grand a week worth of blood transfusions to keep himself alive long enough for medication to catch up to him, okay? So the fact is, if you have money, you have options, alternate treatments, things you cannot do with basic insurance. Most people think that dying prematurely would be the worst thing that happened, but way worse than that, again, would be if you didn't die, but you were very sick, very hurt. If God forbid something like that happened, Chris, and you had an account with $400,000 of cash in it, just in case, get experimental treatment, go out of the country to get something you can't do here, get a new experimental medicine, take time off, go on a vacation. Would it help you in that situation to have access to that 400 grand?
Yes.
Of course it would. Do you have an account with 400 grand in it just in case?
No.
No. Okay, so that's why you need to have this. So Chris, do you understand why whatever you get for free is good? We just cannot count on it. Anything that we would need to have privately when you controlled it. No loopholes. It's yours. You're going to get it no matter what. You got a living benefit. Do you understand why you want to do that?
Yep.
Great. Okay, then you ask the closing questions. You do the A diagram, overcome any objections. Make sense? Okay. If you follow this process, you're going to get virtually everybody to move forward with you. Somebody was asking me this morning at a class that I was doing, well, what happens is like, yeah, but I want to keep it. If you explain it to them like I just explained it to them over and over and over again, and I kept asking, did you see how I kept getting agreement? Do you understand why that is? Yes. You would want to make sure your family's protected no matter what, right, Chris? Right. You see how I kept tying him down to the statements I was making? He's not going to say, well, I still want to keep my group insurance. He's going to say that if you don't tie him down. If you're just giving him information, you're not tying him to, yes, I understand what that means to me, he might rebuttal and say, oh, yeah, I understand, but I still just want to keep it. But if he says it, if it comes out of his mouth, remember, when you say it, they doubt every word. When they say it, it's 100% true. Understand that about prospects. If it comes out of their mouth, it's 100% true. If it comes out of your mouth, they doubt every word. So I get him to say, yes, I understand. Yes, I understand why I would want to do that. Because then we're on the same page. Everybody good with that? Okay. Permanent insurance. Anybody have a, well, the charger is probably not going to help here.
You got the charger?
Yeah, that's not for the iPad. Okay, permanent insurance. You all know how to do this, okay? But I'm going to show you again. So, they have permanent insurance. The number one thing you want them to do is what? Go get the policy. Go get the policy, because then you don't even need to do any of this, okay? You don't even need to draw that out, because you just say, let me show you how your policy works. Did you know this? Did you know this? Did you know this? They're like ripping it up, right? They're pissed, okay? But let's say they don't have the policy on them. They don't know where it is. They're being hesitant. Well, yeah, I got it somewhere in a box, and I don't want to look for it tonight, okay? Here's what you do. You say, that's fine, Deb. Listen, do you mind if I give you just a couple of minute education on why you don't want to have this? What is this? Some sort of charger for it? Oh, very good. The problem is it's going to unplug from the screen. So we'll wait till it gets a little lower. Okay? So I said, do you mind if I give you a little bit of education? Okay? What did I just get? A yes? Okay? I say, here, let me show you this. I'm drawing this upside down. I would say whole life insurance is very, very expensive. It's like 10 times the amount of term insurance, okay? And it operates in two sides. There's an insurance side and a cash value side, okay? It's sold to you like this. Deb, the premium's never gonna go up. It's gonna be there forever, right? You take money out of it if you ever have an emergency. Sound familiar? A little bit, right? Of course, yeah, because that's how it's sold to you. But there's these three little rules on the cash value side that the insurance salesperson conveniently forgot to mention to you, okay? So let me teach you what those rules are. Deb, the first rule is this. For the first 3 to 5 years that you have this coverage, every dollar you put in the cash, they're gonna take as a fee. So Deb, where do you bank? This is really important, you all, that you have this interaction with them. Deb, where do you bank?
Huntington.
Huntington Bank. So let's pretend you walked in, you opened up a savings account, they said, Deb, we're so glad you're our client. We're really looking forward to a great lifelong relationship. Just so you know, we will plan on seeing you for 3 to 5 years. Because every time you deposit money with us, we're going to take it, it's going to be all gone. Okay, but 3 to 5 years from now, you'll start having money in. So we'll see you then, right? Would you open that bank account if that's what they told you?
Absolutely not.
You're sure, right? Okay,
Yep.
but you just did by buying this. Okay? The second issue is when you finally start to accumulate cash, Deb, and you go to take money out, you have to pay back the loan at interest, 6 to 12% on average. Okay, so whose money is in this account?
My money.
How did it get there? You put it there, right?
I put it there.
Okay, so let's pretend you walked into Huntington. They said, Deb, thank you so much for opening this bank account. We're going to have a great relationship, but if you ever come back here for $1 of this money, we're going to charge you 6 to 12% interest till you pay us back. Would you ever open that bank account, Deb?
Nope.
You're sure?
Yep.
Yeah, but you just did by buying this. Okay? The third thing, way, way, way worse than that, okay, is the fact that when you die, your family will get the choice of the insurance or the cash, one or the other. Okay? So let me show you the math here, Deb. Let's say you have $100,000 of life insurance and you have $50,000 in cash. How did the money get there? You put it there, right? You die. Your family's going to get the choice of the 100 grand or the 50 grand. So Deb, what are they going to pick?
100
grand, right? And at first glance, the average consumer says, what's wrong with that? I bought a $100,000 policy. I got $100,000. I'm all set. Let's follow the money. And I just draw it for them. I say, the insurance company pays out 100 grand. They get to keep your 50 grand. So they're negative 100 grand. They're positive 50 grand. How much money did the insurance company actually have to come up with on their own? 50 grand. What did you buy, Deb? Bought 100 grand. So you bought insurance and you bought savings, but you only get one. In fact, you don't even get the whole one. You're getting half of the one that you bought, but you thought you bought two. Deb, we think that if you buy two things, insurance and savings, you should get two things. Do you think that as well?
I agree.
Great, that's why you should never have this. Okay, makes sense? Other term insurance. We went through a little bit of this last time, so we'll kind of fly through this. Okay? So the number one thing to do is to do what? Have them get their policy. Okay? They're like, I can't find it, it's buried somewhere, blah, 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 blah. You need to show them some value, right? That cash value presentation is an eye-opener. You're going to show them that, and they're going to be pissed, right? They're going to be like, I can't believe that. Let me go get it. And they go up and they find that thing, right? Okay. Same thing with term. So I say, Deb, let me just kind of show you a little bit, if it's okay, how term insurance works. All right, if I give you a little bit of an education.
Sure.
Okay, great. And then I draw it out. So let's say you had $1 million policy, 20 years. Okay. So here's money. Here's time. Right. 10 years, 20 years, 30 years, 40 years. So you have $1 million 20-year term. For all practical intents and purposes, Deb, this is how your policy works. It's $1 million for 20 years, and then it goes away. Okay? It doesn't actually just go away. It gets unbelievably expensive. Okay? And or you have to do another health check, and it still gets unbelievably expensive. So for practical purposes, it goes away. Right? Does that make sense?
It
okay,
does.
very good. So I'm just going to draw this first piece. I'm not going to draw all this yet. Okay? And I'm going to ask them. Remember this from last week. Well, Deb, let me ask you a question. Are you so how long do you have left on your term? Well, I have 14 years left. Okay. So Deb, let me ask you a question. Are you 100% positive, beyond a shadow of a doubt, that in 14 years, when your term's up, you're not going to need $1 of this life insurance?
Not 100%.
Not 100%, right? Okay. And then I'm going to draw this because, Deb, this is kind of what's happening, right? Right now you need a lot of insurance, but over time your kids are getting older, your debt's paying down, you're saving more and more money. Your need for insurance is going down. It eventually will go down to zero. You're 80 years old, you have $1 million saved, you have no debt, your kids are 60, your grandkids are 20, right? Okay, they're all set, okay? So, but what's happening here is your policy's just falling off a cliff right here. It's over, but you still need some coverage. Not all of it, but some.
Mm-hmm.
And then I show them in their policy, and they show you what it's gonna cost to do that, right? And I ask them this, are you gonna pay that price? No, of course you're not, right? So are you going to pay this premium? You show them the premium, okay? Or I tell them if they don't have it, I say your premium is probably going to go up by 10 to 20 times. So you're paying how much now, Deb?
$100.
$100 a month, okay? So are you going to pay it when it goes to $1,500 a month?
No.
No, of course not. Well, that's a problem, right? Because you just told me you're going to need it, but you've also told me you can't afford it, right?
No
Okay?
problem.
So here's what you say. This is the tie down on this specific example. Deb, if I could get you a similar policy, or get you a policy that keeps you at a similar cost, okay, but lets you keep a substantial amount of coverage after the term length is over, okay? Let me see exactly. There we go. After the term length is over, no health checks, okay? Same premium. So premium doesn't go up, no health check, keep a substantial amount of coverage, no ifs, ands, or buts. Would you make that switch? Would you allow me to make that improvement for you? And I just ask them that, okay? So, again, then what I'm going to do is I'm going to show them an example. I'm going to say, well, here, right, we got $1 million of coverage. This is how your policy works, just falls off the end. What if I could get you a policy that did something similar but didn't go away? It just went down, maybe 35, 40, 50, 80%. I mean, it's a range you need to understand. What I would normally say is, what if it dropped down to like maybe 30 or 40% of the current coverage, right? But then it just went down little by little every year till you're 100. It would allow you to keep a good amount of coverage during the time you need some, but you don't have to pay anymore, you don't have to do a health check. If I could get you a product that did that was a similar cost to what you're paying now, that would be an improvement, right?
Absolutely.
Absolutely. Okay, what if it's even more expensive? I would ask them, say, what if it's $20 or $30 a month more expensive now, right? Number one, it's gonna be way less expensive later. And I would just ask them. I'd say, Deb, do you want to fix the problem now for $20 a month, or you want to wait till it's $1,500 a month? Because either way, we got to fix it. And I just tie them down to you. You want to fix it now? You want to fix it later? It's $30 a month now. It's $1,500 a month then. Which problem you want to fix? That make sense?
Yeah.
Okay. Closing questions for scenarios 1, 2, and 3, which is what? No life insurance. Okay. Single, no life insurance, married, and group insurance. All right, I'm going to pull this real quick here and get a little bit of time in. This is a Sharpie. Does anybody have a dry erase so I can write them on the board?
There's one right there next to the window, next to the helmet.
Perfect. All right, very good. Sorry about this, y'all. Normally it doesn't die so fast, but it's dying quickly. So, there we go. Oh, does it charge? I don't know either. Let's see. It's a crazy looking little thing. Oh, it might. Let's see. Is Bobby D? No, not Bobby D. Sorry, y'all.
Thanks.
Okay. All right. So let me explain this to you, right? 2 closing questions. Number 1. If money weren't an issue. So Mr. and Mrs. Client, let me ask you a question. If money weren't an issue, you had an unlimited amount of money to pay premiums, how much coverage would you want your family to have? Pretty basic, right? If money wasn't an issue, how much coverage would you want your family to have? So he has no insurance, okay? He's a single guy, he has no insurance. I just asked him. If money wasn't an issue, how much coverage would you want your family to have? Okay, and they give you a number. Generally, it's in the ballpark. If it's way off in left field, okay, then you might need to educate them on what the purpose is for life insurance, right? Oh, I want $50,000. They're sitting in a $400,000 house, right? So, okay, well, let me teach you about what life insurance is for. Well, most of the time, they give you a relative ballpark, right? Okay, so I write it down. So let's say it says $500,000. So that's closing question number 1. Mr. and Mrs. Client, okay, if money were an issue, how much coverage would you want your family to have? And you let them answer. Closing question number 2. Money's always an issue when it comes to making decisions like this. How much on a monthly basis do you feel like you could comfortably invest in making sure your family was properly covered? How much on a monthly basis do you feel like you could comfortably invest in making sure your family's properly covered? Mr. and Mrs. Client, before you respond to that question, most of our clients say generally somewhere between $50 and $100 a month. Some of them say 100 or more. Some of them say sometimes as little as 30 or 40. Where do you feel like you could comfortably be at on a monthly basis? You let them answer. Okay? So let me say it again. Mr. and Mrs. Client, obviously money's always an issue when it comes to making decisions like this. How much on a monthly basis do you feel like you could comfortably invest to make sure your family is properly protected? Okay? Before you answer that, most of our clients will say somewhere between $50 and $100 a month. Some say 100 or more. Sometimes that people say as little as 30 or 40 a month. Where do you feel like you could comfortably be? And I let them answer. Okay? Where can you comfortably be? I let them answer. So they say 50 to 100, which is virtually always. Right? Say great. So we keep it under 100. You feel like you'd be comfortable with that amount? Yes. Sales done. Okay? Right? So all you do now is you go in and you make those numbers work. Okay, what's the rule of thumb? You want to get clients the coverage they want and need for the term length that is affordable. How do you show them, right? Well, I want 500 grand on a 35-year term. It's more than that. Okay, well, you can show them that, but you always start by showing them something that is what? Inside their range. Okay?
What did you say? So if we could keep it under.
So we keep it under whatever they said. You feel like you would be comfortable with that. Sure, great. So then I'm going to go on a quick quote, and I'm going to mess with some numbers, right? And I'm going to get them the coverage they need for the term length that is affordable. Hopefully they can get the longest term that they're eligible for at the coverage they want for the price they want. That's great, but that is secondary. Why is it secondary? Because of our end of term feature. They're not crap out of luck like they would be everywhere else where it just goes away. They're going to keep a good amount of coverage at the end of the term, even if it's a shorter term. We can deal with that problem then without any sort of issue, right? You understand? But what you don't want to do is you don't want to freak people out by showing them the most expensive thing. Well, you wanted $500,000, so I quoted you a 30-year term because that's what I think you need, but it's way more expensive than you said. No, I'm going to work that term down till I can show them something that is in the range or as close to the range as it's ever going to be. Right? Do you understand? Okay. Questions on the closing questions?
Okay, so I had a gentleman and he wanted $1 million in coverage and he wanted to spend about 200, which it didn't work out. So I should have cut the term down.
Absolutely.
I mean, he went forward with it. It was about $40 off.
Okay, well that's close. But what term length did you get him?
35.
Oh yeah, see? So I would have shown him something that was under 200, and then I would have said, so we can make that work. Let me just show you a couple of other numbers first.
Okay.
Here's the longest one you can get, and it would be here.
Okay.
And here's one that's even shorter, and it would be here. Virtually, they always take the one that's in their realm. So you were fine, but that could have gone badly.
Okay.
Or it could have gone badly. Well, I wanted it to be here. It's a little more. I'm going to have to think about it. If you can give them the coverage they said in the premium amount that's affordable, virtually always they're going to move forward.
Well, and this one was iffy because they still have a policy depending on what they were paying, but they couldn't show me that
They
policy.
couldn't find it.
So I'm going back. So
Yeah.
if I need to, then just reduce the term.
Absolutely. Yeah, absolutely.
Or split it up? Is
You
that a
could do
better
that
way?
too, either way.
Okay,
Yep, either way. Technically, you'd be reducing the term on pieces of the coverage. Yeah.
right.
Any other questions on this? These are the most important questions you can ask because it sets the client expectation. You've given them boundaries in which to play. If you don't set boundaries, there's no way to have an intelligent conversation. Because they could want more, they could want less, they could have an unrealistic amount in their mind of what it's going to cost. If you give them boundaries, I want this, I want it in this range, now you can fulfill what they have asked for. If they haven't asked for anything, you haven't met their need, and now it's very subjective. It's, oh, let me think about it, let me go, right? Because there's all sorts of things. Do I really want that much? Well, let me see what the other rates are, right? If they say, I would like this, and I'm willing to pay this, and I can give it to them, they have met their need,
Okay, single person
okay?
has no clue what they need or want.
Okay?
Where's the reasonable starting point for us?
It's a good question. So it depends on their income.
Right, 8
Right.
to 10 or 10 to 12 times
Yeah,
their
generally
income?
10 to 12 times their income. Okay? Now, as a single person, quite honestly, which benefit is more important, the death benefit or the living benefit?
Living.
The living benefit is the most important. If you die, yeah, we want your family to get something, but that's secondary. If you're not dead and you have a chance to not be dead because you've got a bunch of money, you get all sorts of different treatments, that would be in your best interest.
Right.
Okay? So they're eligible for up to what? It's free. It's 40% up to 250 grand. So what does that mean? That would be a policy for 625,000 face value. 40% of that maxes that living benefit out. Now, if they have waiver premium, they can get 70% of the face value up to 400,000, which is still about 600 grand. So either way, 600 grand is about what they should have. Right? At some point, they will grow into the need for the death benefit. But right now, what they really need is the living benefit.
Right.
It's just, by the way, if you die, we're going to give your family 600 grand.
625?
Yeah, 625,000 is the smallest face value at which you max out those
That's what I wanted to know.
benefits.
Okay.
Yeah. Now, don't be selling people who make $1,000 a month
Right.
$625,000 policy. It's got to be reasonable, right? Yeah, because they don't need 400 grand. They're making $1,000 a month. Okay. Anybody have questions on the closing questions? Okay, very good. Let me pop this out here. And, we'll go to the rest of this. Okay. So if money weren't an issue, obviously money's always an issue. Most of our clients say somewhere in between. There we go. It's going to be thinking for a second, most likely. There we go. All right. Okay, now I'm going to erase this button. Okay. So, the A diagram. This is what it looks like. I'm going to draw it out for you. Okay? This is the close. Go ahead, take your picture of it if you want. Let me show you how you present it, okay? Here we go. So, this is what you say. 100% assumptive. Mr. and Mrs. Client, what we're going to do today is we're going to file an application. I'm drawing this upside down. With that application, we're going to put 1 month's premium of whatever the premium was that you're going forward with. Let's say $75 a month. We're going to put a 1 month premium for $75 into an escrow. Mr. and Mrs. Client, do you know what an escrow is? They're either say yes or no. So it's kind of like what you pay with your mortgage. They take money and they put it aside. It's still your money, but it's being used for a future purpose. Okay, so we're going to put that money in escrow. From today forward, Mr. and Mrs. Client, we're going to begin covering you for free for up to, but not in excess of $500,000, okay, for the next 30 to 60 days. During those 30 to 60 days, preferably in the next 2 weeks, I need you to do 2 things for me. One is a telephone underwriting interview, where they call you and they ask you the same medical questions I'm going to ask you today. That's how we catch people that are not telling the truth. So please tell me the truth, or at least remember what you're going to tell me if you are not telling the truth, okay? The second thing is, you're going to have to use a paramed exam. Blood, urine, and vitals. They'll come to you. You can go to them. They'll meet you at work. It's really simple, okay? And you're going to, again, do blood, urine, and vitals, okay? About 60 days from now, Mr. and Mrs. Client, we're gonna get a physical policy back. When we get that policy back, we're gonna start what's called a 20-day right to review. During those 20 days, Mr. and Mrs. Client, we have 3 options available to us. Option number 1 is we can say no thanks. Now, why would we do that? Okay, it's unlikely but possible that they may say no thank you because of this health condition or this, whatever, okay? It's also possible that it comes back so outrageous because of this thing or that thing they don't like that we just decide not to move forward with it. Very unlikely, but it is possible. If you say no thank you or if we say no thank you. So either way, we're gonna refund to you this money that's in escrow back in full. Okay, so Mr. and Mrs. Klein, I need you to understand there's absolutely no risk in you going forward with this today to try to get this done. Do you understand? Okay. The second option is we can raise it or lower it. Okay, so when it comes back, if we decide, you know what, I want a little more, I want a little less, I want to make some changes to it, we can do that. We're not locked into what we're applying for. We're going to get a policy issued and then we can make changes. Okay? The third option, Mr. and Mrs. Klein, is we're probably going to keep it as is because it's going to come back exactly how I've shown you. That's the most likely option, okay? So we get it back, we look at it, we say, yes, this is exactly what I'm looking for. So we're going to sign it into effect. Okay? We're going to sign it into effect. The money is going to come out of escrow and it's going to pay 1 month forward. Okay? So Sherman, listen, right now it's March. Okay? March and April are free. May would be paid for by what, Sherman? By the escrow. So sometime in June, we'd start paying the monthly premium. Does that make sense? Okay. So what I'm going to need from you is I'm just going to need your driver's license. I'm going to ask you about 10 minutes worth of questions. Can you grab that for me? And that's the close. It's an informational close. All you're doing is you're showing them the necessary information about how this process is going to work. Okay? The next logical step, if you're giving them what they want for the amount they want to pay, they need it, the next logical step is for them to go forward with the application. There's not another logical step. Any other step would be illogical by definition, right? Do you understand? So I'm not going to ask them, what do you think? How do you feel? Do you want to do this? I'm saying, great. What I'm going to get from you is I need your driver's license. I'm going to ask you about 10 minutes worth of questions. Can you grab that for me? Okay? And I assume the close. That's called an assumptive close. If they have a concern, they will voice it. I promise, okay? But most people, if you're good at it, now you see what we're going to do today. We're going to take an application. With the application, we're going to put a 1 month's premium of $75 into an escrow. Do you know what an escrow is?
Yes.
Okay, great. It's just like your property taxes and insurance on your mortgage. Okay, from today forward, we're going to start covering you for free for up to but not in excess of $500K each for the next 30 to 60 days. During those 30 to 60 days, preferably in the next 2 weeks, Ta-Nehisi, I need you to do 2 things for me. The first is I need you to do a telephone underwriting interview. So they're going to call you and ask you the same questions that I ask you today, okay?
Okay.
So make sure that you tell the truth, okay? The second thing that we're going to have you do is we're going to have you do a paramed exam. Blood, urine, vitals. It's paid for. They'll come to you. You can go to them. It's very simple, okay? About 60 days from now, Ta-Nehisi, we're going to get a policy back, okay? Once we get the physical policy back, we start what's called a 20-day right to review. During those 20 days, Ta-Nehisi, we have 3 choices available to us as the consumer. Choice 1 is we can say no thank you. Why would we do that? Well, there's a possibility the company may say no thank you because they don't like this or they don't like that. It's slim, but it's possible. Also, highly unlikely but possible is that it comes back as just very, very different than we thought, right? We thought it was going to be $75, it's $500 a month. We reserve the right to say, I don't want to move forward. If you don't want to move forward, the company doesn't want to move forward, either way, we're going to refund to you that escrow in full. So Ta-Nehisi, I want to make sure you understand it's not going to cost you anything to go forward with applying. There's no risk as long as you don't move forward. Okay?
Yes.
The second option is you can raise it or lower it. Okay. So when it comes back, if we want to make some slight changes to it, we can do that. So we're not locked into what we're applying for today. Okay. But the third thing, right? Third option, most likely option is probably going to come back exactly like I've shown you, and you're going to keep it. Okay. So you're going to get it. You're going to sign it into effect. Okay. The money from the escrow is going to come out. It's going to pay the next month forward. So Ta-Nehisi, it's March right now. Okay, March and April are going to be free. May will be paid for by what?
The escrow.
By the escrow. So we're going to actually start our payments in June. Okay.
Okay.
So Ta-Nehisi, what I'm going to need from you is I'm just going to need your driver's license, and I'm going to ask you about 10 minutes worth of questions. Can you grab that for me?
Sure.
See, I don't even need to look at this. I've done this so many thousands of times. I just have it in my mind, right? But every pertinent piece of information he needs to make an educated choice to better his family situation has been presented. He knows his ins, he knows his outs, he knows what he's allowed to do, some of his options, right? Why not move forward? There's no sense. Well, I just want to think about it. It doesn't make sense, right? Why not get the coverage started now while you're thinking about it?
If you're running term now instead of
Okay,
custom
good.
managed.
So what happens if it's term now? Term now is an instant issue product. Okay? So this whole section about 30, 60 days, telephone interview is gone. Mr. and Mrs. Client, what we're going to do is we're going to apply. We're going to ask you about 10 minutes worth of questions. We're going to put a 1-month premium in your escrow. Okay? In about 30 seconds, real time, we'll get an underwriting decision. So they'll either say you're good or they'll say we need to look, give us a couple more days. But sometime between 30 seconds from now and 2 days from now, we're going to know whether they've covered you or not. If they cover you, it's going to be exactly as we've asked for. Okay? So at that point, we're good. It automatically goes into force. Money comes out of escrow. You start paying for it next month.
Okay.
If it doesn't come back like we asked for it, we'll have the ability to review. We can always decide not to go forward with it. Okay? If you're in a good market, very rarely are you going to do a term now. Why? Because term nows are small face values.
Right.
Okay, most people in 2016 are not going to be greatly affected by having a $250,000 policy, right? They need $750,000, $1 million, right? $1 million is not a lot of money. That's 50 grand a year for 20 years. You're not rich with $1 million, right? Does that make sense? Okay, so that's the close. Next week, we're going to go through overcoming objections. What happens when you get to that point and they say, I need to think about it? I want to ask somebody. Let me talk to my agent. We're going to go through all of that. Hopefully this helped. God bless you guys. We'll see you soon.